Welcome back. My name is Shyam. I am here to manage your money and grow your wealth. So today we're gonna talk about the invest in a real estate without buying the property. So normally people think that investing in the real estate requires to buy the house, buy the property, then develop it or manage the tenants. So really there is a way that you can invest without buying a single property. But how it's possible? That's we're gonna talk about in this video. So I request you to like my video and subscribe the channel and let's get started. So there are the 5 different ways that you can invest in the real estate without buying the property. Normally, in the real estate, there is a headache of the buying, searching the property. If the property is in the good area, then it will give the returns, and you're not sure about the future rates of the market fluctuations, the hometowns. There is the because of the real estate market is heavily dependent on the economic situation of the country. So anything affect that will directly impact on the real estate. So it's a myth that one cannot buy the property without investing, without buying the property. So that is the myth that I'm here to clear. So now let's get started. So I figure out the 5 different ways that you can invest in the real estate without buying the property. So the first way is invest in the developments. So as you know that the developments as like real estate commercial developments or the housing developments, so it doesn't need to find the property to manage the tenants and to actively involve in the development. So you need to find the builders or the development companies that are really interested to invest in the real estate. So you need to find the big development companies and promising that are in the market from the long time, and then you need to associate with the developers. So this is very simple simple processes. So you don't need to create any documentation or sign, but you need to sign one simple agreement of the terms and conditions and the returns you will get once you join the developer. So the development companies are normally source the houses, they find the location where they want to build the properties, they build the properties and they sell the property. So you do not need to actually involve in this whole processes. So you need to only consult with the developer. So you need to fund for the developer to finance the developer's vision. So how the developer is going to create the commercial properties or his vision of the hometowns or the future. So you need to join the developer and you can just invest your final or you can finance to the developing companies. So you can earn the dividends as the construction get completed, the property gets sale or the property get the valuation in the future, then you will get the dividend. So it is a very promising one of the source of income that you can diversify your portfolio. I gotta talk about the risk factor. So the risk factor is comparably low if you are seeking for the long-term investment, but it is quite a risky development for the newcomers that are looking for the short-term returns. So you need to wait for the 2 to maximum 5 years to hold your investment in these development companies. So surely you will get a return once the price get valuation. So this is the first way you can invest in the real estate in the development. Second one is invest in real estate companies. So there are the real estate companies that finance the construction, finance the building, commercial. They can finance the commercial houses to produce the income, to generate the income. So these are the companies that basically involved in the financing for the development projects. So you need to associate with these developing companies and be a financer. So you don't need to actually involve in the development works or to manage the development activity, how the different kind of resources. So builders and all the teams are there to manage. So you only simply you need to finance for these companies and they are take care of it. So you will get the dividends once the commercial complexes get complete, and if they sell with the higher prices, then you will definitely have the promising returns on this investment. So the as compared to the risk factor, these are the less comparable because the financial companies are well settled companies. They operate in a large group of the area, so they are not constrained to a particular city. So they have large area of residential properties, commercial properties. So there is a promising return and a low risk factor as compared to development work. So this is the second kind of invest in a real estate companies. The third one is invest in the real estate investment trust. So what is the real estate investment trust? So this is the corporation that the organization that form the trust to finance for the development and the commercials. So this is the trust that different people finance for the development work. So this is one of the organization. It may be the private organization or the public organization. So there are the different type of the real estate investment trust. So the trusts that are equity traded. So equity traded trusts are the trusts that have the portfolio in the stock markets, and they trade on the stock. So these are the big companies. They are traded in the stock, and they are the promising source of income. So they pay the great amount of dividend because the housing market is evolving, and if the valuation get increased, then your dividend paycheck will get increased. So this is the first type. Then second one is uh, publicly REITs, but not traded on the stock market. So these are the public companies, but they are not traded on the stock. So this is one type of companies. Second one is private companies. So private companies is they are neither hold any portfolio on the stock, but yes, they operate privately, and they do not have registration on the security board, SEBI commissions. Then the fourth one is the mortgage companies, mortgage REITs. So mortgage real estate investment trust. So these companies basically finance for the people who want to seek the home, to own the home. Though they finance the home loans for these people. So these people get the home loan from this trust, and they buy their own home. So the companies earn the profits through the interest they are lending any property, or they are helping the home seekers to get the loan. So basically these are the different type, and you need to select the equity trust, equity companies that are less risky as compared to the risk. The equity companies has the less risk, but yeah, if you go with the private players, then there might some certain risk because they have the constraint of the resources, and they cannot afford any fluctuation in this housing market. So this is the third type of investment in REIT companies. Then invest in home construction companies. So these are the companies that invest in the home constructions and to development of some commercials. So these companies do not actively involve in the development, though they don't look any development activities. They only finance for the development. So if there is any commercial development is going on, or any residential construction, so they normally finance for their construction activity. So these companies are very big companies, and these are the very trusting and promising companies to invest. So you need to invest through the stock or bonds in this type of investment, and there is a less risk as compared to other type of investment. So these are the one of the promising source. They pay the well dividend. If you are planning for the long term investment like 5 to 10 years, then you need to hold on your investment on this investment home in construction companies. So these are the one of the promising companies, and they do not generally affect the economic fluctuation because uh, they are not they are keeping their rates low. If some companies have their homes already constructed in well settled area, so they normally have the low rate to buy the homes for the homeowners as compared to the new construction. So their properties usually get sale, and there is a less risk and you will get the promising dividend. So this is the fourth type of investments in home construction companies. Then the fifth type is join a real estate crowdfunding opportunities. So crowdfunding is normally there is a one new trend has been evolved in the real estate that people are trading through the online. So they normally don't associate it with any trading house companies or any construction companies, but there is an online application like crowdfunding application and they apply invest through online. But this is the new kind of investment platform that has been evolved. So you need to get better understanding how this platform will work for you. But there is no access history of this platform because this is the new platform. If you gauge the past history, though, so there is no past history available to track how this platform will work for. But surely, if you want to invest for the long term, like 5 to 10 years, then crowdfunding is a best platform for you to use. So in the crowdfunding, the different peoples gather on this platform and they fund for the new development or the construction. So it is basically one of the trusts that people finance on the crowdfunding, and their investments are being used for the construction of the commercial houses or the residential apartments. So if they get if the valuation of the commercial apartment increase or the residential buildings valuation will get increased, then the crowdfunding will get the profit from through the dividends in the form of regular paycheck. So it is as compared to the risk factor, yes, the crowdfunding is a new platform. You need to aware and you need to do the proper research before investing in the crowdfunding. So these are the 5 steps that you can invest in the real estate without buying the home. So keep investing, like the video and subscribe the channel. Thank you for watching.